I was in New York a couple of weeks ago at a conference and this guy Saylor was talking. I mean, I've never heard more financial nonsense than what came out of that guy's mouth ever in my entire existence in this career, in 30 years. Anybody who had experience in finance in that room, all of us were talking about what the hell is this guy talking about? Nobody understood it. The math made no sense, and it still doesn't. With Saylor, his premise is based on borrowing and using that for a high velocity instrument like Bitcoin. The problem is when you have people like Saylor borrowing at 12.5%, okay, on preferreds, that's a really dangerous place to be. Because what happens is you screw your preferred shareholders over. Then what happens is your MNAV drops below the actual price of Bitcoin. That gap seems to be closing in on itself. When it does, then that guy's in a lot of trouble because his leverage is huge. I think Michael Saylor's right about owning Bitcoin long term, but is it right to buy a treasury and to think that a treasury knows more than everybody else out there as far as how to manage a treasury asset? I don't think so, man. Like, no way. No, I think it's dangerous. If you don't have that kind of disclosure and transparency in this market, you better be focused on something that does have that transparency and disclosure. And that's where our hedge product actually fills a gap. You better hedge yourself because people are counting on that money to be there. We want to bring in those investors who are on the sidelines. We're looking for reliability and transparency because at some point they're all going to blow up. The ones that aren't kind of hedged and the ones who are hedged are going to cannibalize those that weren't thinking about it this way.